Hey everyone, Jason at Hard Money Bankers and Hard Money Business. I want to go over the actual true cost of lending hard money as your borrowers see it, as your clients that you're lending money see it. Because sometimes we get this a good amount of times actually that the borrowers reach out and be like, I want to work with you guys, but your rates are 13 or 14% in 3 or 4 points. It's just too expensive and it doesn't work. There's other lenders out there that are cheaper. I can go to my bank. I can go raise capital myself. And I agree, as a hard money lender, you need to advise clients that there's a lot of different funding sources and there's a time and a place for each one. But I want to break down just so you fully understand the true cost of hard money so you can better explain this to your borrowers and your clients to show them and to prove to them that it's actually not as expensive as one might think. So let's just use 13% and 3 points, right? That's a good way to kind of look at that. So 13% is the interest only payment and it's annualized. So if someone has that loan out for a whole year, then they're paying the full 13%. But month by month, it only costs them like 1.1% per month. So it's not actually all that expensive. And then there's the points obviously as well. So let's just base this off of 13% and 3 points. So what I like to tell somebody is the average life of our loans are typically about 6 months. If it's a flip, someone's going to try to flip that house in 3, 4, 5, 6 months. So usually when I'm talking to a client on the phone, I'm like, okay, well, let's back into our terms and how much your cash at close is and how much the cost of the capital will be based on what you think. So I'll ask them, hey, how long does it take you to flip a house? And they're like, oh, I can move quick, like 3 or 4 months. I'm like, okay, cool. Let's base this off of 6 months. That's a good way to look at this. So 13% annualized ends up being 6.5% per month, right? 6.5% cost per month. Add your 3 points, so that's 9.5%. So if someone flips a house and they pay you off or they refinance, whatever the case is, and they only need the money for 6 months, the cost is 9.5%. So that's $9,500 for every $100,000 they borrow. So a lot of borrowers, hey, I'm going to flip a house. The hard money lender's going to put up all the money. It's only cost me about $9,500, and that's rate and the interest payment. So it's actually a lot more affordable than one may think. Now, depending on what market you're in, someone might be more price sensitive than others. But my first rebut to anybody, especially when I'm talking to a really high quality borrower who uses banks, who uses their own private money, who uses HELOCs on their primary, who uses, raises their own capital, who uses institutional backed lending, is listen, we don't have any of the headaches. You're not going to have any of the headaches that you are. If you're going to raise your own private money, I'll tell the client this, that's a full-time job as itself. It's hard enough to find good deals. Now you have to go find money for it. If you're dealing with a bank, you need tax returns, you need all kinds of headaches that you have to deal with. Work with us. We're easy to deal with. We'll make the process simple. We'll close quick. And it's only going to cost you $9,500 for every $100,000 you borrow. So you phrase it like that for somebody, it makes it look more affordable, and it is more affordable. And also tell them, if you only need the money for 3, 4 months, it's cheaper than $9,500 for every $100,000 you borrow. So hopefully you found this helpful. I'm always looking for tips and tricks to help you, things that we do in our business every day to help you become a better hard money lender. If you're looking to start or grow your hard money lending company, feel free to reach out to us. That's what we do here. Thanks.